Welcome to Insights That Matters, the show that takes you deep into the minds of some of the most brilliant minds in finance. And today, we're setting our sights on Bill Ackman, a figure who's really made some waves with his investment strategies and some bold moves in the market. So we're going to uncover what makes his approach tick, what we can learn from his journey, both the triumphs and the stumbles. And here to help us navigate through this financial labyrinth is our expert, who I think has a real knack for making even the most complex strategies understandable, especially for our listeners here in India.
It's great to be here. Bill Ackman is definitely a fascinating figure, and his approach really does challenge conventional wisdom in a lot of ways.
Absolutely. And I think one of the things that is so intriguing about Ackman is that he wasn't always this Wall Street titan. He actually started, as he called himself, a frustrated passive investor. He dabbled in real estate early on, inspired by his father, and even made an investment in Rockefeller Center properties.
And that's where things took a very interesting turn for him. He was really disappointed with the management's decisions there. He felt that they weren't acting in the best interests of the investors. And this experience was really a turning point for him, pushing him away from passive investing and towards a more hands-on approach.
Yeah, he realized that just sitting on the sidelines wasn't really for him. He wanted to be more involved, to have a say in how his investments were managed. And this is where we kind of get into active investing, right?
Precisely. Ackman is not content with just buying and holding a diversified portfolio. He really delves deep into companies. He engages with management, and sometimes even pushes for changes if he believes that it will unlock value. Think of it as rolling up your sleeves and actively shaping the trajectory of your investments.
He's not just along for the ride, he's taking the wheel.
Yeah.
And this is something that kind of leads us into his moat principle. You know, he's not interested in investing in just any company. He looks for businesses with a moat. Can you help us visualize this? What does a moat actually mean in business terms?
Well, imagine a company as a castle, and the moat is that protective barrier that keeps competitors at bay. So essentially, it's a company's competitive advantage, something that makes it very difficult for rivals to steal market share or to erode profits. Think about a company like Reliance Industries here in India. Their vast network, their diverse businesses, and very strong brand recognition make it incredibly difficult for new players to compete. That's a powerful moat in action.
It's like having an impenetrable fortress protecting your business. Makes a lot of sense. But Ackman doesn't just stop at identifying companies with a moat. He takes his research a step further.
Absolutely. His research process is quite meticulous, almost like a detective meticulously gathering clues. He calls it his big research project, and it has 3 key steps. First, he filters for businesses that have a strong moat, ensuring that they have the potential to withstand competition and generate sustainable profits. Then he dives deep into evaluating the management team. He's not just looking at their track record, he's assessing their competence, their honesty, and their alignment with shareholder interests.
So it's not just about the business itself, but the people at the helm guiding the ship. What's the final piece of this research puzzle?
Risk assessment. Ackman meticulously scrutinizes potential risks, even diving deep into industries he might not be familiar with. He wants to understand potential threats, regulatory changes, emerging competitors, everything that could impact the long-term trajectory of the business. This thoroughness allows him to make those bold, high-conviction bets that he's known for.
So he's not throwing darts blindly. He's making these calculated moves, backed by in-depth research. And I think one of the most intriguing aspects of his approach is this concept of concentrated investing. It seems counterintuitive to what many traditional investors advocate for.
It does. Instead of spreading his investments across a vast array of companies, he concentrates his capital into a select few. He believes that by focusing on a smaller number, he can truly understand these companies inside and out, maximize their potential, and potentially generate higher returns. Of course, it's a higher risk, higher reward strategy.
He's basically putting all his eggs in a few very carefully chosen baskets. That takes a lot of conviction.
Absolutely. It's not for the faint of heart. You need to have done your homework. You need to truly believe in the long-term potential of those businesses and be comfortable with the inherent volatility that comes with concentrated investing.
So thinking about our listeners in India, how does this translate to their investment landscape? Are there opportunities for retail investors to kind of adopt a similar approach here?
Certainly. The Indian market is brimming with potential, and there are definitely companies with strong moats and compelling growth stories. But I would caution that concentrated investing does require a certain level of expertise and risk tolerance. It's crucial to thoroughly research companies, understand their business models, and assess their long-term prospects before making such a concentrated bet.
So it's not just about replicating Ackman's approach blindly, it's about understanding the principles behind it and then adapting them to your own investment style and risk appetite. Now, we can't talk about Ackman without addressing his setbacks. He's had some high-profile losses.
Yes, his investments in Herbalife and Valiant Pharmaceuticals resulted in significant losses. But what's fascinating is how he handles these setbacks. He doesn't shy away from them. He acknowledges his mistakes, analyzes what went wrong, and uses those experiences to refine his strategies. It's a testament to his commitment to continuous learning and adaptation.
It's like that saying, you learn more from your failures than your successes. Ackman embodies this philosophy, constantly iterating and evolving his approach. I'm curious to delve into some of his winning bets and unpack what made those strategies successful. But before we do that, let's take a quick break and come back to explore the specifics of his most notable victories.
Sounds good. We'll be right back. All right, so let's delve into some of Ackman's winning bets.
Yeah, I'm particularly interested in his investment in Canadian Pacific Railway back in 2011. This is a company that many consider to be underperforming, but Ackman seemed to see something that others missed.
That's right. He recognized the inherent value in Canadian Pacific. They had this vast network of tracks, strong asset base, and a prime position in the North American transportation market. So the fundamentals were there. But the company wasn't really firing on all cylinders.
So what was holding them back?
Well, Ackman believed that inefficient management was really the culprit. He felt they weren't maximizing the company's potential and saw an opportunity to streamline operations, boost profitability. But, he don't just buy shares and hope for the best.
Oh, no. That wouldn't be the Ackman way, would it?
No, not at all. He launched a proxy battle to replace the CEO and install a new leadership team that shared his vision for the company. It was a bold move, met with quite a bit of resistance, but Ackman persevered. He presented a compelling case to shareholders, outlining his plan to optimize operations and improve efficiency.
Sounds like a real-life corporate drama. So did he succeed?
He did. The new CEO, Hunter Harrison, came in with a proven track record of turning around underperforming railway companies. They implemented a series of operational improvements, from reducing dwell times to optimizing train lengths, and it had a dramatic impact on profitability.
So it wasn't just about, shaking things up. It was about bringing in the right people and implementing a clear strategy.
Exactly. The stock price more than tripled during Ackman's involvement. It was a resounding victory for him, and a clear demonstration of the power of active investing, combined with a keen eye for recognizing hidden potential.
It's a great reminder for investors to look beyond the current narrative and really analyze a company's underlying strengths and weaknesses. Now let's switch tracks to another one of Ackman's successful ventures, Restaurant Brands International, the parent company of Burger King, Tim Hortons, and Popeyes. This wasn't just a case of investing in a few restaurants.
No, not at all. Ackman's involvement with Burger King began back in 2010. He helped take the company public again after a period of private ownership, but his vision extended far beyond simply reviving the Burger King brand.
So what was his master plan?
Ackman saw the potential for growth through strategic acquisitions, essentially consolidating the fragmented fast food market. He orchestrated a series of mergers, culminating in the creation of Restaurant Brands International.
It's like he was playing a game of corporate chess, strategically moving pieces to create this dominant force in the industry.
That's a great analogy. And his strategy paid off handsomely. Restaurant Brands International has become this global fast food powerhouse, a testament to Ackman's ability to identify synergistic opportunities and execute a long-term growth plan.
Yeah, these success stories are quite inspiring. But, I think it's important for our listeners to remember that Ackman's journey isn't without its bumps. His investments in Herbalife and Valiant Pharmaceuticals serve as a reminder that even the most seasoned investors can experience setbacks.
Absolutely, no one is infallible, and the market is inherently unpredictable. But what sets Ackman apart is his willingness to learn from those mistakes, to analyze what went wrong, and adapt his strategies accordingly.
It's that resilience and continuous learning that truly sets great investors apart. Now, Ackman often talks about the importance of long-term perspective in investing. This isn't about chasing quick profits.
No, not at all. Ackman is playing the long game. He believes in the power of compounding returns over time. He seeks out companies that have durable competitive advantages, those compounders that can grow and create value for years, even decades to come.
It's a philosophy that resonates particularly well in the Indian context. India is a growth story that's still unfolding, and a long-term perspective can be incredibly rewarding for investors here.
Absolutely. Those who recognize that long-term potential
Right.
and can ride out the inevitable market fluctuations stand to benefit significantly from India's growth trajectory. But there's another aspect of Ackman's approach that I think often gets overlooked, and that's his emphasis on aligning investments with personal values. He believes that investing isn't just about generating returns, it's about making a positive impact.
Oh, this is where things get really interesting. So he's not just looking at the financial bottom line. He's considering the impact on people, the planet, and society as a whole.
Precisely. Ackman actively seeks out companies that are operating ethically and sustainably, those that are contributing to a better world. This could be companies promoting renewable energy, reducing their environmental footprint, or supporting fair labor practices.
It's about investing with a conscience, knowing that your capital is supporting businesses that are making a positive difference.
And this resonates particularly well in India, a country facing a myriad of social and environmental challenges. Indian investors have an opportunity to direct their capital towards businesses that are part of the solution, promoting sustainability and social progress.
It's about recognizing that financial success and positive impact can go hand in hand. Ackman's philosophy certainly provides a compelling framework for thinking about investing in a more holistic and purposeful way.
Now, as we wrap up our exploration of Ackman's strategies, let's leave our listeners with a thought-provoking question. What if we took his approach a step further and applied these principles to the broader investment landscape?
I like where you're going with this. It's about looking beyond our individual portfolios and considering how we can influence a more responsible and impactful investment ecosystem as a whole.
Exactly. How can we encourage more investors, both institutional and individual, to embrace a long-term perspective, to align their investments with their values, and to actively engage with companies to drive positive change? We'll delve into this question further in the final part of our deep dive, where we'll explore the broader implications of Ackman's philosophy and its potential to shape a more sustainable and equitable future.
Sounds like a great discussion to look forward to. Stay tuned for the final part of our deep dive into the world of Bill Ackman. Welcome back to Insights That Matters.
We're wrapping up our deep dive into the world of Bill Ackman.
We've explored his strategies, his wins, his losses.
And now we're kind of zooming out to consider the bigger picture.
So, last time we've left off with a question.
What if we applied Ackman's principles, not just to our own portfolios,
but to the entire investment landscape?
Right. How can we encourage more responsible and impactful investing on a global scale?
That's a big challenge.
It is.
It's moving beyond a purely profit-driven mindset,
Absolutely.
embracing a more holistic view that considers the impact on people and the planet.
It's a big shift.
Yeah,
But Ackman's philosophy offers a compelling framework for this.
I think so too. His emphasis on long-term value creation, sustainability, positive social impact.
All of that.
It resonates deeply, I think, with a new generation of investors.
It does.
They want their investments to align with their values, to make a difference in the world.
Yeah, they want their money to do good.
So how do we translate these aspirations into tangible actions? How do we encourage more investors to adopt this approach?
Well, I think it starts with education and awareness.
Okay.
We need to highlight the power of capital, the impact it can have. Show investors the connection between their decisions and real-world outcomes. And we need to provide them with the tools to make informed choices.
Like what kinds of tools?
Access to reliable data on a company's environmental, social, and governance performance.
This is where ESG investing comes in, right?
Absolutely.
Yeah.
ESG investing is becoming increasingly mainstream.
Yeah, I'm seeing that too.
It provides a framework for evaluating companies beyond just financial metrics,
Oh, okay.
looking at their impact on employees, the environment, the communities they operate in.
It's about considering the bigger picture, the
Yeah.
long-term sustainability of a business.
Exactly.
But is ESG investing enough on its own?
Well, I think we also need to encourage active engagement,
What do you mean?
like Ackman does, using your influence as a shareholder to advocate for change.
So not just passively holding the stock,
No.
but actually getting involved.
Yes.
Attending shareholder meetings.
Yeah.
Voicing your concerns. Collaborating with other investors.
All of those things. Pushing for improvements in corporate governance or sustainability practices.
It's about being an active owner, not just
Yeah.
a passive recipient of dividends.
Exactly.
So let's bring this back to India. How can we apply these principles in the Indian context?
Well, India faces unique challenges and opportunities. When it comes to sustainable development,
That's true.
rapid growth has lifted millions out of poverty, but it's also strained resources and amplified inequalities.
So it's a bit of a double-edged sword.
It is.
Okay, so where do responsible investors fit into all of this?
That's where they can play a crucial role,
Okay,
directing capital towards businesses that are contributing to a more sustainable and equitable future.
businesses that are part of the solution?
Yes,
And are there signs that this is happening?
there are.
Oh, good.
There are positive signs that this shift is underway.
That's encouraging.
It is.
But we can't just sit back and relax, right?
No, we need to keep pushing forward.
Educating investors, providing them with the tools and resources they need, encouraging active engagement,
All of those things.
and creating a policy environment that supports sustainable and responsible investing.
Absolutely.
It's a big task.
It is.
It's a collective effort involving everyone: investors, businesses, policymakers, civil society.
It really takes a village.
So I think this deep dive into Bill Ackman's world has been really illuminating.
It has.
We've explored his strategies, his philosophy, his impact,
And hopefully we've challenged ourselves to think bigger.
to apply his principles not just to our own portfolios, but to the world at large.
I think so.
Well, on that note, thank you for joining us on this deep dive into the world of Bill Ackman. We hope you found it valuable and thought-provoking.
We did too.
And as always, if you enjoyed this episode, be sure to like and subscribe to Insights That Matters for more deep dives into the world of finance. Until next time, happy investing.